Okay, so a quick roundup of today, and I think the real thing that I've been watching today is the banks in the UK, both in the UK and in the US. It's definitely from the sort of moves that we seem to be seeing in the fixed income market. There seems to be, I think there's a pretty strong chance there's going to be a hike in the US in December, and also judging from the gilts, the way the gilts are moving. I think I wouldn't be surprised if there's going to be some tightening sooner rather than later in the UK as well. I certainly think the Bank of England and Mark Carney really overreacted a bit to the whole Brexit thing, and really there was no need, I don't think, to be so aggressive with another round of QE. And further rate cuts. I mean, it seems to have sort of stoked inflation. So I won't be surprised. And the way the gilts market looking, I think we're getting closer to when we'll probably see some tightening in the UK as well. So for the banks, they've been the ones that have been really positive in the last 2 or 3 trading sessions. Obviously, the higher the rate of interest, the better it is for their net margin, and the more incentivized they are to lend out money. So this one, I wish I'd have traded a few of the banks, but the one I have actually traded is Lloyd's. This is broken out of this. I guess it's kind of a messy inverted head and shoulders. This sort of falling wedge. It rebounded off the neckline, and we really, looking good at the moment, but I'd really like to see it take out the 200-day moving average first with a nice break through that. Before I get too carried away about this trade, but I think I know Lloyd's is still about 89% owned by the government, but I think it's got a lot of room for growth. It's the biggest retail bank in the UK by distance. And that really seems to be where banking's going at the moment. There seems to be a shift away from investment banking and more towards, I guess, traditional banking, high street banking. So Lloyd's, the figures of the results have been good for the last few times they've released. They've started to pay a dividend again finally, and I think there could be some value in this one. The real one, Barclays, has moved a lot in the last couple of days. I wish I'd have traded this one. I still might at some point in the future, but not. I'm not going to go chasing up here. I had it sort of. If it's going to trend in this sort of channel area, if there is a pullback, I think it'll be a good one to trade. It's had the cross, the 50 and the 200-day cross. It's sort of started to form this kind of channel trend area. So again, Barclays could be a good one to watch going forward. Similarly, HSBC has had a very good. There's been a very good run recently as well. This one. It's trading very nicely in an uptrend. So there might be some opportunities at HSBC as well. Looking at the US banks, I think there's been some big moves in these as well. This is Goldman Sachs. I think they must be. I'd be very surprised if they don't hike rates now in December in the US, especially seeing charts like this, seeing the price of gold as well. You never know, but look at the way that's taken off. It's a big move. Similar to JP Morgan, we're seeing the same sort of breakout. So, yeah, I think in the coming weeks, months, if the sort of interest rate story develops, if there is sort of more inflationary pressures, then there could be some good trends to follow, some breakouts in the banks.